We are here with Charmel Maynard, the treasurer and CIO of the University of Miami, for part two of our vlogs. Let's start off with a topic that is at the front of a lot of people's minds, which is virtual AGMs. We're actually doing a webinar this month with some panelists. And so we're thinking through questions like, how long should it be? What should you include from a content perspective? What should you exclude from a content perspective? What should the general flow of it be between macro sections, funds, portfolio companies? Should you include video? Should you not? Should it be pre-recorded? Should it all be live? These are some of the things that a lot of GPs are thinking about. So I would love to hear the customer's perspective on the consumer's perspective here of this content. Can you give, maybe before we dive into virtual AGMs, give the high level about University of Miami, what you do from a day-to-day basis, and then diving into, how many of you attended this year, and then your thoughts on AGMs?
Yeah, certainly. So the University of Miami is a private university in Coral Gables, Florida. We are what we call an academic medical school. So we have not only higher education side, we also run 3 hospitals and have a large health system. I'm the CIO and treasurer at the university. So I basically wear 2 hats every day. The first one is, traditional treasury. So managing the capital structure, liquidity management, so on and so forth. And then the second hat is investing. So I'm in charge of investing all the university's assets. So that's about a $1.1 billion endowment, about a $900 million defined benefit pension plan, about another $1.4 billion of short-term working capital. And so, with respect to the investment side of the house, we've had a handful of AGMs, over the last 6 to 9 months, from private equity to more conferences such as the Milken Conference. And I'd say, my general feedback is that they're doing the best they can in a virtual environment. I think we've all heard, taglines like Zoom fatigue and things like that. But I think what I've found is that the most effective way of delivering that content, again, to me as an LP, has been sort of a mixture of, pre-recorded type content mixed with live content. And I'll give a couple examples here. And so there was one AGM where it was all live, right? And it was great. But as you can imagine, while Zoom has been great and WebEx and all these other things, that they're still working out the bugs. So it seemed a little bit jittery, they couldn't cut over as quickly. It just wasn't as maybe clean and professional as I'm sure they wanted it to be. And, for me, that wasn't the biggest of the deal, but, it was clear that it seemed like it was in the infancy stage. Then on the other side of the spectrum, there was the fully recorded, fully produced, edited, that for me, the markets are moving so quickly day to day. Who knows how long before this event they recorded it, but for example, and I'll do my best to keep it as no name as possible, they had recorded something where there was a CEO of a company whose company happened to be going public on that day when the interview was airing, and it was going gangbusters. And he was just talking, he was like, this, we're really excited about this or that. It was clear that they couldn't pivot quickly enough to talk about what was happening right this time. Why do you think that, you guys are, your stock's going through the roof? How do you feel about it? So on and so forth. So, I have seen some funds do a really good job of a mixture of, okay, we're going to start off with some recorded content, make sure we hit all the highlights that we as investors want to know, right? Sort of how has COVID been? What are your returns looking like? What are multiples? What are new updates, mixed with great content in the form of live interviews, right? Well, live being through Zoom, because I know for me, that's usually where I get the most information. It's, I look through a pitch deck, Jordan, to figure out how are returns and an update, but I really want to hear from, senior professionals or, external guests about, what's going on in the world that we live in today.
How long have you found is a good length for a AGM? And have you seen any be split up for 2 days?
Yeah, so for example, the Milken Conference, I think, did it over almost 2 weeks, right? So they ran from, call it 9 to, call it 3 or 4, and they just ran it for way longer, whereas they used to do it in 3 days, right? It was sometimes 4 and 5 days if you include the weekend. And I thought that was interesting, right? Because you can really pick and choose, where do you want to go that day to see it, right? Versus when you're in person, you have to usually sacrifice going to one panel because you were being pulled over here. And then plus you had dinners and you had networking and stuff like that. So you really got drained over 3 days. I would say the most effective is usually over one day. I'd say 1 or 2 days, right? Call it half day each, because I think an hour or two at any one point on just one subject tends to be a little tedious. Maybe it's just my ADD or because I'm a millennial that I'm like, all right, let me start checking my email on my phone. Somewhere in sort of the hour long for one subject, for me at least tends to be the most effective, and call it over 2 days.
So most of the people who are going to listen to this con are like in the private equity buyout space. And what I have seen are AGMs that are 2 to 4 hours long, and they will start off by doing a firm overview that might be pre-recorded, and then they will go into fund 3 pre-recorded, where they have one person on the side talking about the deck that's on the other side of the screen. After that pre-recording of the fund overview, then each portco, they will do live Q&A to supplement that pre-recording. Do you prefer them to do live discussion about the PowerPoint slide and it's worth the trade-off of the technical glitches, or do you like the pre-recorded overview followed by the live Q&A? What are your thoughts around that?
I actually prefer the latter, Jordan. I think that's a nice mixture of, okay, here's a virtual, recording of what exactly do you want me to know? What do you want me to hear? What's going to be most effective with my time? Because, some people, if they go off script, that it can be, all of a sudden your 2 to 4 hours could be, 3 to 5 hours, right? Which, for people, giving up an extra hour can be difficult. So how do I effectively and efficiently get the information and the content that you as a GP want to deliver to me as the LP, while then supplementing any information that I may have or want to know in terms of Q&A through a live session, so that I can sort of raise my hand or send a Q&A, send a Q, through the chat or whatever format they have. So I really like the in-between. I've heard both sides of the story, but I like a little bit of the Goldilocks approach to it.
Would you rather have a pre-recording sent maybe a couple of days or a week beforehand, so then the hour or 2 hours is more Q&A focused, or have you not really found that need? Or is it okay to have everything on AGM day, but then you have the one-on-ones with the GPs afterwards? What do you want as an LP, and to get the most out of that period of review for the GP?
Yeah, I think if you send the videos before at least, again, I'm speaking for myself, I'm going to be multitasking, right? Realistically, I'm going to have it on in the background. I may not even watch it, right? Until I've blocked out that piece of time in my calendar to focus on that, I'm probably going to be doing 2 or 3 things. So I prefer to have it on that day. Again, you think about it mentally as if I'm going to this conference in person, right? So I'm going to be doing this for that time. And then the reason why I don't really necessarily want to use all that time for Q&A is because I think we've all been on enough investor relation calls and where nobody wants to raise their hand, right? So I would say that it's more times than not that people are not, there's not sort of this free-flowing conversation of Q&A that's going to last 2 hours versus, a handful of questions. Maybe they throw in some pre-collected questions. So, I think if anybody really wants to follow up on a one-on-one, we could, I'm sure the GP is always going to be open to doing a call or a Zoom right after. But I think trying to condense it, have it purely dedicated for those 2 to 4 to this cause has been the most effective way to, in my mind.
Now, I'm thinking about a more creative idea, but it's also a little bit more risky for the GP, which is having a structure where, let's say the first half is webinar format when you go through funds, portcos. What about the idea of having almost like a Zoom meeting format with, call it, 25 selected, and, it doesn't have to be the Brady Bunch of LPs, but you have, call it a small group where it is live Q&A. Now, it's a risk for the GP because they can't think as thoughtfully through things, but it's a way to engage the LPs more. What is the difference potentially between that type of format versus the submit your questions through the Q&A webinar feature and when to get to them? Like, what's the differential between those?
I think from an LP, we get way more of it in that format that you mentioned, Jordan. So for example, Milken Conference has been doing sort of small roundtable discussions, where, it's a break room of 5 to 7, mixture of GPs and LPs. Obviously you go in knowing what the topic is, and then you have sort of a group leader sort of to help facilitate the conversation. But that's been the most helpful because, again, you're free-flowing conversation, right? You're talking to your peers, you're talking to the GP, it pivots here, it pivots there, and you're right. It is a little bit of a risk to the GP if their leaders aren't ready for a question or say the wrong thing. But ideally in those situations, you're not being recorded. You know that it's sort of everyone has to participate. Your video has to be on, and it's really just a better way to exchange data. I think for me, those have been the most fruitful conversation in any of these.
And I guess it also comes with the presumption that it's not as of a hostile LP base.
Right.
In terms of that also goes to like what is the quality of the relationship between the GP and the LP, built over time. I do like the point that you mentioned, like maybe at that section turn off the recording to say this is off the record. The reason why we are doing this is because we want to have a quality discussion, not with just one, but a small group of LPs about some topics that are important to you. We are taking a risk by doing this, but like quality discussion is the key paramount here. It's interesting. I really like that idea about turn off the recording for that section. Maybe shifting over to, trends in the industry. I have seen some articles come out recently with you discussing diversity and endowments and pensions. So I just want to kind of hear your thoughts about, some macro trends you are seeing within the LP universe, with institutional LP universe, within pensions, endowments, as it relates to diversity and inclusion, and what are some important facts and figures and trends that people should know about?
Yes, certainly. So I think ESG as a whole, right, has been a trend that we've been hearing about for several years now, but I'd say probably the E was probably elevated the most in the past, right? So focusing on the environmental, divesting fossil fuels, so on and so forth. I think this year specifically, with a lot of the racial tension and racial injustice, with things like the George Floyd killing, Breonna Taylor, so on and so forth, I think the S, or the social part of it, has really sort of risen to the forefront, or risen to sort of, what people are focusing on. So I think, in the endowment, foundation, public pension world, institutional LP, I think people have been moving forward on the diversity front, right? I think, trying to increase the percentage of their portfolios that are with minority women-owned businesses. I mean, I know that the Knight Foundation has put out a study from 2019 that said of the $69 trillion asset management industry, just 1.3% of that is minority or women-owned, right? So I think, that's just to show you sort of that disparity, right? Not even disparity, just almost negligible amount that's with minority or women-owned firms. So I think what you've seen is sort of public pensions have probably gotten to the dance first. They have addressed it. They probably have thresholds or different ways to screen managers where diversity is thrown into the mix, along with all the usual things like risk and return, so on and so forth. I'd say foundations were probably next to the dance, or call it 1A, 1B, just because they have a specific foundation with a specific purpose. So it'd be sort of they would be contradicting themselves if they were not at least focusing on something, especially if it's given the purpose of the foundation. I say lastly, and last of the dance, is probably us, which is the private endowment community. So for example, two congressmen, Congressman Cleaver and Congressman Kennedy, wrote a letter back in July to the top 25 endowments urging them to publish their diversity data. And there's no place that I've seen, at least, where specifically private endowments have actually published that data. I'd say I think 24 out of the 25 responded. I think Notre Dame was the only one that didn't, with their take on how they think about diversity, which was monumental, right? That represents, trillions, hundreds of billions of dollars of capital, right? It's the Harvards and the Princetons and the MITs, so on and so forth, in terms of information. Now, everyone, it wasn't sort of an even playing field, sort of how they defined it, but that was huge, right? And I know for us at the University of Miami, we see it as part of our social and racial, justice being in our broader value system, right? As a university, we want to serve a diverse base. We have a diverse base of students. We serve a diverse community, and we would be, remiss if we didn't have that reflected in our investment portfolio.
How do you think about, what that kind of specifically means?
Mm-hmm.
So for example, in Q1 2021, we are going to hit a specific goal about listening to pitches from X amount of minority or women-owned firms, or making specific investments. Like, how do you think about it? And for this next step, and also the broader question is, what is the end state? What's the target end state?
Yeah, so we think about it across several different angles. So one is engagement, right? So we think, we have over $3 billion of AUM. We want to go and engage our current managers, right? And say, hey, how do you guys think about this? What's your diversity policies? What are your targets? How can we measure you, right? Because we think that's going to be one of the biggest ways that we can affect change in the industry. It's if, everyone is going to BlackRock and saying, hey, this is a priority for us. And BlackRock and, firms like KKR have done a great job, at least pushing forward. We're not where we need to be, but letting them know that, trillions and trillions of dollars of capital want to prioritize that. So I think, Bill Gates wrote an article about why he thinks divestment is not effective, is that he thinks engagement and actually putting capital behind things are the best. And he was talking more on environmental, but, we agree with that. The second thing is, access to capital, right? So I think you touched on this, Jordan, us making sure that we're including a diverse crop of managers when we're looking at new strategies going forward. So if we're looking at a fixed income manager, making sure that, a handful of those people that are being put in front of us are going to be minority women owned. And I think lastly is, and you touched on it, is shooting for some sort of target, right? And I think, that allows you to be intentional, right, in terms of how you're allocating and how you're committing capital and how you're managing your portfolio. But then having that number is going to also hold you accountable, right? So you want to set it aspirationally, knowing that you may hit it, right? You may blow through it. You want it to just be a floor, but if whatever variance there is, right, in private equity and hedge funds, and everyone can attest to this, you want to do attribution, right? Why did we fall short, right? Well, we looked at 500 hedge funds. We just couldn't find one that met our risk returns threshold, right? Okay, well, let's give that advice to the LPs who didn't meet it. Or we blew through it because, we found all these people, in this room that we never looked at before. So those are the three lenses that we've been looking at it. And I think different endowments have been doing maybe one or two or the three in different combinations. I think we're still formulating it at the U, but I think, when we do land on it, I think we'll be one of the first ones that's sort of attacking it from all three at the same time.
It's interesting because it makes us wonder, like, what is the target end state? What is the actual percentage of, minority or women CIOs at endowments?
Right.
Is it 10%? Is it 25? Is it 50? Is it 75? What does that mean?
Way lower. I think, based on, Charles Scarina puts a newsletter, and when Kim Lou was promoted to CIO not promoted, but hired at Columbia to be their CIO and CEO, I believe, from Carnegie, he put out a newsletter and was, searching, okay, well, what does it look like in endowments specifically? And I think his database was like 650, but that included pensions and foundations and stuff like that. But when all was said and done, I think there were 4, maybe 5 Black CIOs in endowments. Yep. Right? So it's a very, very small percentage.
I was talking with somebody at a firm in Chicago, and they said, I don't know what the end state is because we're so focused on there's the big problem and it just has to be better than what it is right now. And it seems like step one is just everyone needs to get the messaging out. And like you were saying, engagement with the GPs. We have to do something. Let's work collaboratively. And then once we get to that next step, whenever that is, call it a year from now, then we have more data to say, okay, well, let's kind of think about what it actually means now that we're past the discovery phase, the discovery changes. How do you think maybe specifically within VC and earlier stage, and I'm referencing women in VC, there's this website, I'm friends with Jessica Peltz, who is one of the co-founders of it, and they had this new article that came out called The Untapped Potential of Women-Led Funds. And one of the kind of calls to action in there that they're basically saying is that the check sizes for LPs are way too big to fund women-led VC firms, and that might also go onto the buyout side, but maybe specifically within the venture community. Do you have any data readily available, or just maybe from a high level, is this a priority, or is it kind of bucketed in the same thing as minority and women owned general percentage? I didn't know if you had any kind of thoughts or maybe data around like the VC community.
I don't have it at the tip of my fingers, Jordan, and I know Crunchbase just put out a report on a lot of, what's the percentage of entrepreneurs that are women or minority? How are they funded versus, maybe white males? And as you can imagine, the number is extremely low. And I'd say it's even lower than in the private equity space or, call it the finance space. And, they know that they are on our list of people that we engage as well in terms of show us your breakdown. Because I think you touched on it. I think progress, it's all relative, right? I think we all want to move forward in this direction. So when we're thinking about, okay, how do we measure progress? If you were at, one person in the senior management manager realm, and the next year you are at 3 and you triple it, that's good progress. Now, look, you may not be where you need to be yet, which might be 10, might be 15, whatever it might be, but we want to see you progressing in the right direction. And I think, it's going to be attacking it from all angles, right? There's the pipeline issue, right? So like, what's your total makeup of just employees, right? That might include admins, that might include analysts, that might include a lot of different people. But then it also needs to be from the top down. So of your either ownership, board, C-suite, what does that makeup look like? And then hopefully if you're lowering it from both angles, you get to hopefully some sort of medium. But I think it's going to be from multiple angles that you're going to have to attack it.
Let's kind of shift more personally for this. How do you conceptualize race? And what are maybe some misconceptions? And just kind of what have you experienced in your career, through starting at JP Morgan to where you're at now? Just interested to hear kind of how you think about this.
Yeah, certainly. I think, look, I grew up between Trinidad and Georgia, right? So, younger years, mostly in Trinidad and back and forth to Georgia. So quite frankly, my concept of race is different from other African Americans, right? In that I grew up, and I'm a big proponent of mentorship, right? I think when kids see, they can emulate, and I think it becomes ingrained in their head what I can be, and it's not out of this world to think you can be the president or you can be a lawyer or a doctor, so on and so forth. So I grew up around, Black lawyers, Black doctors, but also white lawyers, and just everyone together. So, my mindset has always been, I can be anything I'd like to be. Or once I got to the US, that was my mindset, right? So I didn't come in with sort of thinking that I was less than, or that, I wasn't supposed to be here. I fully expected that I was supposed to be at boarding school or at Amherst or JP Morgan. And I didn't have that imposter syndrome. And I think for me, because I had that mindset, I was lucky enough to have these experiences. Places like JP Morgan were great to me. I think opportunities, equal to other people. Now, look, don't get me wrong. I'm sure there were things that were going on or comments that were said that probably were a little bit over the line. But ultimately, I had a phenomenal experience at JP Morgan. Now, I can't say that was the same for everyone, right? There were other African Americans or Black people who may not have had the upbringing that I had, who may not have been, at a boarding school or a school like Amherst and gotten sort of used to being, in those settings that got to JP Morgan or other places like that and just kept digging themselves in a hole, right? And I think it's a two-way street. I think, the firms need to do a better job I think they do a great job, Jordan, of getting talent and putting them on the doorstep. Right, I think they're great programs like SEO or MLT or Twigo that gather talent. But I think there needs to be more done with, once you get them there, is how do you ensure that they're not falling behind just purely on a cultural, right? Because I don't think that it's on an intellectual level, or that's a dearth of that. So for me personally, it's been a great career for me. I'd say, my biggest, if I can think about one thing that always stands out to me, it was more on the systemic standpoint where, I was in boarding school and I was being discouraged from applying to top schools, right? So the Ivy's, the top liberal school. And I was lucky enough to have, a family friend who worked at a university to say, no, actually, you're exactly what they want, right? You have really high GPA, you play 3 sports, you're involved in the community. That's what universities want, right? So I don't know how many people or kids or underrepresented kids are going to have that person to step in and say, hey, don't worry about what this institution is saying. You should be doing this. And that's why I'm so passionate about mentorship now, Jordan, especially working at a university. It's, people spent all this time with me, coaching me for these things, enlightening me, making sure that I knew sort of the way to sort of be as best as I could be, that I'm trying to just pass it along to as many kids and people as I can.
So what would your message be to maybe a 20-year-old who's at a historically Black college and they are, asking the same questions that you're kind of mentioning about your experience? Like, what would your advice be to them and kind of where you're at now, in your career and being a chief investment officer of a private university? with $3 billion under management. What would you say to them?
Yeah, I'd say, look, be aggressive, right? I'd say get out there, be vocal, ask questions. I'm a big believer that, there's always something that could be a common ground that you never know might spark a mentor-mentee relationship. And I think, the most effective people in business had mentors, right? And, for me, some of my mentors didn't look like me. They weren't from where I was from. They weren't my same age bracket, but we found some sort of common, interest that, besides sort of, you have to do a great job. I think that goes without saying, right? So this is assuming that you're top of your class and you're hard worker and all that sort of stuff. But, to really navigate business and to navigate finance, I think you're going to need somebody to help say, hey, don't step on that landmine, go this way, zig that way, zag that way, because, I'll speak to investment banking because that's my experience. Something as little as double side printing a document or stapling a document can have a lasting effect on how a managing director sees you as a person. Like legit, it's so dumb. But like, I literally had somebody say, hey, do not double print this for this person. They will. And I'm like, wait, what are you talking about? It's like, they hate double-sided presentations. And like, as dumb as it sounds, and when I, sort of rose through the ranks at JP Morgan, and all of a sudden I'm in the review sessions for this analyst, and you hear some of the things that MDs are saying, it's like, well, you had one interaction with them. Like, why are you dinging them from being top of their class to being, an E to an M plus or whatever, the ranking system is, because it was in black and white versus color. You know what I mean? So back to your question, it's putting yourself out there. Do not be turned away because this person doesn't look like you, doesn't speak like you, or maybe even has different views. You just never know where that mentor is going to come from. And I think
I'm that river guide.
That's going to be a really, really important part about being successful in anything you do.
Last question is, you were a sprinter. One of your three sports was being a sprinter. When you look at how you have evolved as a professional, do you think that you were a sprinter and now are a sprinter? Are you another sport? Are you still in track and field? What are your thoughts about kind of drawing this parallel between you being a sprinter in sports and how you evolved in your career and how you view your day to day?
Well, I'd like to think that I've, developed a couple other skills and maybe more of like a decathlon athlete now, right? With a little bit of everything. But, I think now I don't do much. And I think especially my current job as managing an endowment, we think extremely long-term, right? We're managing money in perpetuity for our current students, their kids, and, their kids, so on and so forth. So for me, I've definitely transitioned more to a marathon runner, to use that analogy. It's had to take a difference in mindset, right? And I was trained, in classic corporate finance investment banking, which is get the deal
transactional,
get it done. If it wasn't done, get it out your mind, on to the next one, right? Now, whereas in endowment management and asset management, it is, it's long relationships, it's a long time horizon, it's letting things unfold and not being discouraged if, again, it goes right when it should have gone left, knowing that you're still on track to get to your final destination. So, but now, I do a little bit of shot put and high jump and other things as well, but definitely more of a marathon runner now.
And in this climate, we might be ultra marathoners, 100 miles or more.
Exactly. We're buckled in, and I'm on my standing desk now because I think we're buckled in for a little bit longer in terms of this work from home thing.
It's awesome. We've covered a lot of ground. We'll have to find episode 3 very soon to do.
I'm around. Anything for you guys, Jordan, just let me know.
Awesome. Thanks so much.